Let's take a look at some charts from this week's article on Litecoin for Brave New Coin. So a lot of people like to compare Litecoin to Bitcoin in various aspects because Litecoin is essentially Bitcoin's cousin. It's a carbon copy of Bitcoin, except for the fact that it's 4 times bigger in many ways. So it's 4 times bigger as far as the expected end supply, circulating supply. It's 4 times quicker as far as the block times are concerned. And it already had its halving on August 7th, 2019. So a lot of people pointed to Litecoin and said, well, this is what could happen with BTC, where it just continued to sell off. I mean, I disagree with that because mainly LTC has just been slapped around by the rest of the market. It doesn't really have a mind of its own. It did arguably bust north before the entire market did in February, March 2019. But other than that, it very rarely does its own thing before or after everyone else. It's generally just together with everything. So it broke up at the end of the year with everything else. It broke down in March with everything else. And now it's mean reverting with everything else. I talk about this every video. I talk about this any chance I can get. And some people might think, well, the GitHub commits don't mean anything. Fine. But when you look at where GitHub commits used to be and where they are now, it just makes me a little concerned that there isn't much dev work going on. Now, Charlie Lee has addressed this multiple times, saying that it's basically one guy merging everything from BTC onto LTC, or testing code and then merging it, but there's no commits in the master branch for that reason. Okay, fine. As long as the LTC buyers and holders know that going into it, that there's essentially one guy who just merges code and there isn't necessarily any innovation going on the master branch. They do have a extension block and Mimblewimble thing in the works being tested. It's actively being developed. They're currently in the testing phase of that. I think it would be a disaster because extension blocks are basically a black box where anything can happen in the extension block and then it comes back to the main chain and hopefully it syncs up with the rules of the main chain. Now there are a bunch of safeguards and yada 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 that go along with that, but that's a major concern. I'm glad it's happening in LTC. I'm glad they're experimenting with it. It looks like it's going to eventually come onto the chain, if not by the end of this year, probably by Q2 next year. I don't think any of that will have any effect on the price whatsoever. It's a great testnet for BTC though. Cycle usage, interestingly, continues to push up on LTC, approaching 70%. Not really sure why, but that's good for the chain. Fees are continually just lower than everything else. That's the one reason LTC will ever rise in price, in my opinion, is because it's a spillway for BTC and other coins. So if everything else is full from a transaction perspective or high in fees, you can buy LTC, move it quickly, and be done with the transaction. You could do the same with Ripple. You could do the same with any of these trash coins that really only have a method of exchange as far as what they're useful for. Looking at transactions per day and average transaction values, they've essentially been flat since past 2 years. Any rise in average transaction values has likely been due to the rise in price and not necessarily increased on-chain activity. So if this were a bullish picture, you'd want to see something similar to late to mid 2017, where average transaction values went up and up and up. I think this is when it got listed on Coinbase, maybe not. But average transaction values got up and up and up. Transactions per day up and up and up. And right now it's just flat. This is probably just speculative miners or speculation and miners, not necessarily economic utility. I don't know anyone off the top of my head who's like, yes, I must send all my transactions on LTC. There's no benefit really, other than low transaction fees. This is average block size and average transaction fees. So you can see fees quite low historically back to 2017 levels. Block size is at a multi-year low, suggesting that there isn't much activity on the chain and or it's scaling really well. Probably a combination of both of them, just because transactions per day is super low. If we look at NVT, which is an inverse metric of economic utility, the line here, the fill is daily active addresses or monthly active addresses. You can see monthly active addresses, multi-year lows around 2017 levels. Not something you want to see if you're bullish. You want to see vibrant and continuously active on-chain activity. And you can see it's just been nothing but down, down, down ever since 2018. And there's no reason to use LTC unless you really have to. There's no reason to hold it. There's no reason to buy it. There's no GitHub activity per se. There's no innovation per se. So yeah, I don't know if there's even a community in LTC anymore. I'm sure there is because there's diehard LTC people. But this on-chain activity just kind of says it's dying. Nothing really going on. And that's why NVT kept rising, because if there's no on-chain activity relative to the market cap, and the market cap keeps going up, it just says it's way overbought. It's way overvalued. And on that drop on March 12th, it came right back down to the previous range. So again, all this stuff says the same thing. I want on-chain utility to increase. I don't want on-chain utility to decrease. If I'm bullish, if I want a long-term healthy chain, people are talking about it. People are paying attention to it. People are excited about it. There's no proof of stake here. It's just mining. I'll talk about the mining stuff in a second, but it's a very unexciting milquetoast sort of chain right now. Here's MVRV, which is another inverse metric of on-chain utility, and you can treat it as an oscillator. So overbought up here, oversold down here. You can see it reached near oversold, but it did not breach 0.5 for more than a day, which historically has been the buy zone. So buy zone, sell zone, decision zone. Again, sort of unexciting. It's at the lower bound of the decision zone, so it can certainly go higher from here, become super overbought again. But it's nothing that's screaming buy or anything like that based on this signal. This is hash rate and difficulty. And again, the halving was in August. Ever since the halving hit, the hash rate has dropped like 70% or more. It's kind of just stayed there. Had a pretty decent drop again on March 12th when mining profitability probably dropped pretty heavily at that time. And it's just starting to recover as price recovers. So I expect hash rate to just mirror price unless there's something exciting going on. I don't expect any new script ASICs anytime soon. So what you have is what you get, which may be a good thing. You know, maybe these just all die off. You know, they do have a shelf life. They don't last forever. So maybe most of these just don't exist anymore. Or maybe there's script miners that I don't see listed here in development, secret development. I don't know. But if you look at the profitability, they're all negative except one of them that was recently released. So maybe if you're a ASIC manufacturer, you're looking to make a script miner. I just don't think there's enough interest in them. So maybe LTC is the first chain where all the miners die, all the ASICs die, it becomes anti-ASIC, and it just goes to pure CPU, GPU mining. I mean, that would be super interesting long term if nobody cares to make a script ASIC anymore. So it just is anti-ASIC because there aren't any. It'd be super interesting. All right, let's look at technicals. Open interest of Bitfinex at the top. VPVR volume profile of the visible range on the side here. Volume oscillator RSI and 50 and 200 EMAs. So you can see open interest has pretty much been mega long since early 2019. Shorts have continued to fall. Longs fell a little bit on March 12th, but nothing insane. I mean, there was a bit of a long squeeze there, but there's still massively long overall, net long. Looking at VPVR, it's in this jumbly mess, so it's probably going to continue to chop. I mean, there's a lot of price history here. There's all this rise from 2017, this 2018, 2019, more 2019, so there's a lot of volume here. So it's going to consolidate, it's going to bounce around. I don't expect it to break 65 anytime soon. You get the 200 there, it's at the 50. All these resistance points, it's either going to need to follow the market, where it just rises and falls without any heed of the previous resistance, or some massive consolidation pattern. There's no bullish or bearish divergences on RSI, which is fine, and 5200 is crossed bearish. It was briefly crossed bullish, and then March 12th happened and the rest of the market kind of died off. Did make new yearly lows, did make a yearly low, multi-year low on RSI. All says that there was a big jump in selling exhaustion there. People just got margin called, or they were fearful and they sold, or they hit their stop loss, all that stuff. But on the downside, I mean, there's plenty of support at that local low now, between 27 and 37 probably. So this is nothing I want to touch as a trader anytime soon. It just looks trendless, sideways, garbly-gooky nonsense, unless there's some sort of chart pattern that emerges or consolidation pattern. So the 50% of the range is around 55 bucks. So it's going to have to break 55 to get me excited about a long-term bullish continuation. You'll notice that 55 is kind of like the peak VPVR, the 200 EMA. So there's a ton of confluence for resistance here. So that's where it's got to break on the cloud. Bullish above the cloud, bearish below the cloud. It's just trying to mean revert now back to 56, 55. Here is LTC, BTC. And again, it's got this massive overhead VPVR resistance, a decent psychological resistance, yearly pivot resistance at 0.01. It's at local lows. I mean, it might get this weird Adam and Eve thing and then try for a run to 0.01. But again, it's nothing I want to buy as a trader. It's below the 200, it's below the cloud, it's below 50. It's at lows. There's really no support below the current low. Should it fall further, it's nice that it's been flat for about a year, but I don't really see anything too exciting from even a range perspective. It hasn't really tightened at all from a B-bands perspective. There's no triangles here. There's no patterns here other than, the potential Adam Eve. But that's weeks away.